Okay, good morning and welcome to the Minervini Private Access Training Room. I'm Bob Weissman. If you could do a quick raising of your hands, letting me know that you're hearing me loud and clear, that would be helpful. And we'll also do the same thing for Mark Ritchie. Good morning, Mark.
Morning, everybody.
You just raise your hand, letting us know that as well. Great. Mark Minervini will be joining us in just a moment. Right off the bat, just want to remind everybody for the benefit of we have the new Monalert powered by Minervini private access platform launched this weekend successfully and have had a very smooth transition. Again, all of your trade data should transfer over. We're going to be doing a more formalized tutorial on this this week, as well as the fact that we did have a preview of the video, which is in the video archive button here, that you would have the ability to just watch at your convenience. The preview is going to show you primarily the different features, the added features, the new functionality of the platform above and beyond what you had before. One thing to note, if you're not aware or did not watch this from last week, is the SMS text messaging functionality has gone away with this, as the mobile app has been updated even more for the robustness, quickness, and instantaneous information being posted to both the live stream here as well as your mobile app. And if you have been looking at that or testing that so far, I've been watching it. It's coming through near simultaneously in both cases. So we'll be doing a more formalized tutorial on this and recording this sometime this week. Also, one quick note, because there have been a few questions, which I know is a little bit not provided for, but in the ability to import with the import button on the closed trades tab, what you simply can do until we get a more formal tutorial on this is if you were to select the export, that's going to give you the headers, since you do have to have your imported spreadsheet have the matching headers as we have. This would allow you to add longs and shorts, by the way. One of the headers of the export you'll see, if you were to select it, you can select either the 3 versions of export, but that will provide you the headers that we're looking for you to be doing as an import. And this will be shown in the tutorial that will be recorded shortly. But that's the quick way for you to learn what are the headers that your spreadsheet needs to have in order for it to match ours, so that it can be all uploaded into our analytics section for your former trades. Looks like we do have Mark Minervini in the room as well now. So if we could do a quick sound check with you, Mark.
Hello, everyone. Can you hear me? Raise your hand.
Looking good with that.
Okay, good.
So we just went over a few details, Mark, of the platform, but otherwise we're ready to get started here.
Okay, let's get started. Let's do some
You
Q&A.
want to project, or in the meantime?
I can project in just a second here. Hold on, just
Okay. First question we're getting is from Michael, who's asking, what do you consider an overweight position if he's splitting his portfolio into 25% position sizes with 4 stocks representing a fully invested portfolio? Almost all of his positions have been a quarter or half of his exposure, keeping his total exposure rather to under 50%. I consider an overweight position to be a full position at 25% for that one stock. Do you ever hold an overweight position overnight, such as coming out of a bear market?
Just coming out of a bear market. What does that have to do with it? I'm not sure. I'm not understanding what a bear market has to do with holding overnight. Do we ever hold a position, a overweight position overnight? When things maybe are going really, really well, I might hold an overweight, but I wouldn't hold a very large position overnight. To me, a very large position would be, 50% of your portfolio, 100% of your portfolio. That's really asking for trouble. But I have held, 20, 25% positions overnight, but that's under optimal conditions. How about you, Mark?
Yeah, very similar. I would just say I think overweight, these are relative to what's a full position. If he's saying a full position is 25, then I wouldn't consider an overweight 25. If a normal full position is 25, I would consider an overweight 30, 35, 40, and I would never hold anything maybe over 30 overnight.
Right.
Just personally.
Yeah. One other quick note I did forget to mention Guys, if you did not add your credit card information, that's what this is. As soon as you do it, this yellow banner will go away. Virtually every one of you I have seen has added your credit card. So please do that. That's what will take away this yellow
I'm
highlighted.
going to share my screen, so it's going to take you away here now.
Okay, great
Okay,
one.
so,
I see it. Good.
okay, good. Looking at the Dow here, trying to turn up. Now we're squatting here, and that's sort of what's happening with this Goldman Sachs, that it's squatting with the market. It's more of a market type stock, of course, but trying to go into some conservative things here that just to let you know, I'm backing into some of these trades based on stop. Some of, there's a few things that came out on the buy alert list, quite nicely, but the stop was wider, they gapped. So just, based all on risk. Like I said, I'm just bringing you the top, the trading, the very, very, most crisp entry points with the lowest risk, particularly in this type of environment. I mean, if things are going great, then I start loosening up my reins and so forth. But again, I'm going real easy here as far as risk is concerned. But I am taking, at times big position sizes, but just keeping the stops real tight. But go ahead, move on. Let's
Yep.
get to the question.
Gandhi's asking, he's struggling a little bit with the ability to identify with IPOs, load sheets. Would appreciate your thoughts on CXM. Are they an IPO load sheet setup that broke out today?
Well, there's nothing different, so that's not a very good load sheet. That's running into a lot of overhead supply. You haven't really changed the trend. This is just does not have the look. These big declines here, and you're just running into a lot of overhead supply there, straight right into it without the stock really rounding out the right side and getting a chance to come up that right side. This just really doesn't have the look of accumulation. It looks like a lot of distribution on the left side. I'll contrast that with something like AGL, which I just put on, which you still have this decline here, but you can see it's a much more orderly, not these big giant declines where you're coming right into it from a squared bottom. And even this, it's just starting to build this cheat area here. So maybe you can buy, you can start from a pullback buy if you opened up tomorrow inside day and then took out today's high. I still, without it rounding out very well just yet, I don't think I would, jump too heavily on this yet, but maybe you start a little position coming there. And then if it can build out this cheat, you add to it. But this is a little bit better looking cheat than the one you just mentioned.
CURV also he mentioned.
CURV curve. Yeah, again, this is a little bit better, but you're really going right. And I have to measure this too. What's the decline here? 25% decline, not too bad. But see, this really hasn't gotten a chance yet to, I mean, you could say this is a load cheat. All right, it is a load cheat. But the look of it, I just think that this probably will run into some selling. Hasn't really rounded out yet, hasn't spent a lot of time here, but this is a little bit better looking, I think, but still looks like it probably would run into, you got this straight decline here. Now you're coming right back into it. So you got to think that there's trapped buyers here, and now when you come back here, you're going to run into that selling of people, getting back to even or getting some of their losses back. So when you have that steep decline, if you're very close to it, you're more likely to pull back, and that's what builds the cheat. And then as you come up a bit more, then you build, or builds the low cheat, then you build the cheat, and then you build the handle, and once you get closer to that high, you've got less supply. So but this looks a little bit better.
Rodney is asking if you could show DAC, the pivot point that you're looking to use. He was waiting for an inside day to give him what he.
Well, you already got the pivot point. I mean, the pivot point was right here above 69.85, and the turn, which I call the turn. If you want to understand this terminology, my first book in particular talks about the turn and the pivot point, the difference between the two. 71.60 would be the stock, what's called making the turn. So making the turn just means you're in a new uptrend on the short or intermediate term basis. The pivot could be lower than the turn. So here the pivot's lower than the turn. So it goes through the pivot, but it hasn't made the turn yet. The turn is the official getting back into an uptrend now, where now you've pulled back and you've taken out the high, and now you're stair stepping your way back up. So again, how I would play that is, usually, buy some through the pivot. And then if the turn is pretty close to the pivot, I'd wait and buy more through the turn. If the pivot's further away, I might take my whole position at the pivot. It depends. Mark, how do you play this? In something like this, would you scale in? Would you take the whole position? I guess that
If those,
depends on market
yeah, if those
conditions.
two pivots were tight, I would probably buy a little of both. And this one also has earnings today. I was looking at this one, but
Right.
I'm staying away for that reason.
A lot of these names on Buy Alert, or at least a handful of them, have earnings coming this week. So, that's where you have to be careful here. So there's a lot of earnings. We're in earnings season right now. So you got to make sure you check that and make sure that you're not, buying right into earnings here.
Yeah, like a DAC today, it doesn't give you a lot of time, but
Yeah.
ODP is tomorrow morning before the
Hold
open.
on. I got to just step away for just one quick second. Just take the next question, Mark. I'll be right back.
All right. Where the next question, let me just say, with James asking, why did you go overweight with Sky? Did you presume it to, well, that's a question for Mark, so let's wait for him to come back. Andrew's asking, how not to choke off a trade easily. He finds that he's always choking off a good trade because he likes to sell half and move the stop up to break even very quickly, as he's referencing, after only a 1 or 2% move in this hard penny environment. So he's always missing the opportunity to play for a bigger move since he's always getting stopped out at break even on the back half. Should he wait for a longer time before he raises his stops to break even?
Well, if you're gonna choke trades off, or if you're gonna sell a portion at 1 to 2% and move your stop to even in a good environment, you're gonna find out you're gonna get stopped at even on tons of trades because that's just not quite enough room. Now, in this environment, you'll probably you wind up getting choked off on everything. Now, there haven't really been a lot of opportunities to play anything for a bigger move. I've been trying, I know. It's been very difficult. So if you haven't been selling or even taking profits into that first, 7 to 10% move, in some cases, you don't even get 10%. So, but listen, the tougher the environment, the more difficult it's going to be regardless. But if this is where Mark talks about sacrifice. If you are going to try and sort of take the tiny little quick move your stop to even, you're going to take a lot of small little gains. And every now and again, you will catch one that you can stick with. So you have to decide, are you comfortable with that? Because that's the price you have to pay, to play the stocks that way.
I'm back, guys.
Okay.
Bob, I think some of the questions early on, I don't know if you went back. Seems like you went the earlier questions that were entered in. It seems like you went over those. You bypassed those.
A couple for you, Mark, that I'm coming back to. One was asking, with your overweight with SKY last week, did you presume it to be a good hand, like a pair of aces or kings, that you went overweight with it?
Well, I think more, more I would be holding longer, like a pair of aces or kings, not necessarily going overweight. I'm playing things for, shorter moves now. So I'm going overweight on the shorter term play and keeping those loss really, really tight. So for that reason, yeah, I do think it was a really good, trade. Pulling it back, taking a look here where you had the nice breakout, then you came all the way back down here, back to the breakout. It's really, trading very close to what I would, call the danger point, or at least, where if it comes in much more than that, it starts to look abnormal, getting near the low of the day of that breakout. So yeah, I would say, it is. It looks really good. This is one of the better looking names, I would say. Really strong here, moved up. Nice move here, coming back up off the lows. Pretty tight here. Volume came in. So I don't know if I call it aces, but definitely this is probably queens, I would say.
Nish, I see your note. I'm talking to the programmer about that. But Mark, Nish is asking if you could share where you came to the 137.10 for KMX entry today, where he was looking at an entry more around the 136.61 high.
Let's take a look. So 137.10.
Yeah, versus the 136.5 kind of area.
Well, the 136.5 was the previous day, but once I didn't put this on until it had already moved up and then it pulled back. So then
Okay.
I was using the day's high for it to take out the high that it made.
There
So
you go.
just that simple, you know. Usually what happens is when they break out and I don't trade them and then they come back in, then what I'll do is I'll use that day's high. If it's not too, you know, of course, if it's not too much past the pivot, but I'm saying if it just comes a little bit past the pivot and then can't follow through, I'll usually wait until it takes out that high to go back in because that's where it's stalled. I want to see it get through there.
Question from Kelly asking about the ATLC on buy alert. She's feeling this is an example of it being a wedging pattern.
The ATLC.
Yep.
No, it's not really wedging. I can see where you can see where it's coming up here, but the wedging that you're looking for, this is more of an ascending base, what we call an ascending base. This right here is where you're looking for the wedging, is in the handle, if you will, or the pivot area. And this had a little pullback right here. I wouldn't say this is wedging. No, no. This is fine. It doesn't have a lot of time that's moved sideways though. So it has been, you know, drifting its way up a bit here, but this is acting pretty good. I'm looking at this more for a trade, you know, than anything. So, but yeah, it's acting pretty good. Look at the volumes coming way down here too. It's almost down to nothing now these past couple of days in the pivot. That's exactly what you want to see. See, that actually tricks a lot of people. They'll think, oh, I can't trade that. The volume's too low. You have to look at the average volume, which the average volume on this is still low. I mean, this is still a super thin stock, but you'll see stocks that trade 1 million shares. And then they get in the pivot and you'll go down and the volume will trade, you know, 50,000 or, you know, very, very, very light, you know, fraction of the average volume. And then that shouldn't get you nervous. That should get you excited. Because that's exactly what you want to see. That's the stock telling you that supply has stopped coming to market and it's in position to be explosive or potentially explosive, of course.
Yep.
Just going back here, because I see there's some questions. Like I said, I think you moved past some of the earlier questions. I want to make sure, you know, people get in the order that they put them in here. There's a question here. It seems that you're always trying to get some traction in the market, even when things are not working. Does this help your returns to have positions on when things start to work, or is it a matter of staying engaged? It's a great question. So it's both. I'm never taking positions. And I think this is a good question for you too, Mark. You know, I'm never taking positions just for the sake of taking a position. I mean, I say I put my toe in the water or I'm taking some pilot buys, but that doesn't mean that I'm taking those positions just for the heck of it, to see, you know, how the market, it has to be a valid setup. But here's the thing, you could have a perfect setup. It doesn't mean it's going to work. And if I haven't had any progress up until that point, well, then I'm going to test the waters, maybe with smaller positions, and look to get that traction, because I just don't have any proof that, you know, stock trades are working. So it's not really, you know, like, again, like I'm not going in there trying to get traction just for the heck of it. And that's just, you know, standard operating procedure. You know, you want the market to confirm, you know, your opinion or your strategy, and never get aggressive until you get some confirmation, because then you're just guessing, you know, and a lot of times you get it wrong. You might get it wrong. There's times where, you know, we've had a market that's melt down or have a big bear market, and it looks like you formed a low and you get a follow through day and bunch of stocks set up. And if you just go in there's times where I went in there and just started buying, and then, you know, stop, gets hit. Volatility, the market really hasn't, you know, bottomed in earnest yet. And I got knocked around. So I learned that it's better to let maybe a couple pitches go by and take smaller swings, or take none and just watch a few. Mark, how about you as far as getting traction, you know, when things aren't working? I mean, now, and again, I should also say this: if things are really not working and, you know, we're getting beat up, you know, a bunch of times, I'm probably not doing anything. I'm just going to cash and then just watching.
Yeah, just taking pitches. Like, I'd rather
Exactly.
wait to see a couple good ones go by maybe before you jump back in. Yeah, I would say, to your point, I don't ever want to trade just to trade. Always looking for feedback, even if I'm being very cautious. I'm looking for some sign that the winds have changed.
Yeah, exactly, exactly. So that I think that's I think that's the best answer.
All right, Niccolo is asking real quick, Mark, you referred to the market being late stage. Can you just better explain? Does that mean you're looking for a significant correction? Old leaders correct, new leaders coming out? What is your reference when you mention late
I'm
stage?
never looking for anything. So just so you know, I try to keep my opinion completely agnostic, and try to stay as neutral as possible with my opinion. So I'm just looking at the data. And so I'm always looking for setups. The only thing I'm looking for are setups. And then when the setups are there, I start to take some trades to see if they're working. And then I look for a theme. That's what I look for. I look for themes. So I try to play play the theme within the confines of my strategy. If I can do that, if there's a theme that I can play within the walls of my strategy, well, then that's what I do. So, for instance, recently, this year we've had a lot of trades just aren't working for very much follow through for swing trades. So I noticed there's, we're getting 1 to 3 days. So I start trading 1 to 3 days until that changed. It hasn't changed much, so that just has been working. But I'm still trading from the same setups, the same breakouts. Everything's, pretty much exactly the same. So I'm still within the confines of my strategy. What was the question though? Because I know I started, I want to make sure I'm
Just
answering the question.
if when you're referring to late stage, is that
Yeah, late
indicating?
stage. Yeah. So when I refer to late stage, we're talking about the market's come a long way, and you might be coming off of several bases, in the stocks. You're just in maybe the later innings in a bull market based on duration, based on the number of bases that you've seen stocks form, and the only thing that I would then quote unquote look for or adjust for is that the later the market gets, the more I start leaning to a trading style versus more of an investing style. So coming off of a bear market, I'm not so quick to take a profit in a stock that breaks out and it's one of the very first names to break out. Maybe I'll sell half of it, but I'll keep half of it, try to play it for a bigger move, go through some pullbacks, as opposed to a market that's late stage, that's been going for a while, and the bear market low is 2 years back, and you've had a lot of stocks make a lot of big moves. IPO market's hot like now, and trades aren't working very well. Now I'm just going to dump them. The minute they're up, I'm going to sell. I'm going to trade everything and just trade out right into strength, or at least trade a good portion of it and then cushion myself on the stop side. So that's really the definition of late stage is just duration and how far we've come based on base count and things of that nature, and looking at sentiment. IPO, like I said, looking at the IPO and secondary market. There's been tons of IPOs. I mean, the IPO market is red hot right now, and that is not a good sign. That's a sign of froth. I just I just ran the IPO screen. It looks like just in the last week or two, there's just been a whole plethora of IPOs that came to market. There's tons of IPOs. So that's usually a sign of froth also in later stage.
Sharika is asking, what sources or criteria do you use that qualifies a stock as being there are too many eyes on it, too popular of a trade?
That's really a much more of a subjective, that's not something that we really can quantify that much, except, well, let's just put it this way. I mean, is Amazon, I think we would all agree that Amazon is, no secret, so there's a lot of eyes on something like that, a big cap name that's been popular. So an Amazon, a Google, those are all, potential crowded trades. So, a trade that's really, really, hot. It's been in the news, and, it's everybody knows about it. And again, if there's, a lot of volume in the stock, one of the things that you could, if you want to quantify it, is you can take a look in the pivot point. You won't get these real massive dry ups in volume. A lot of times you'll see there's still volume, and it's really hard to get those names to have that big contrast in volume. But that's a much more subjective thing that I'm based on my gut and just, my read of, or sort of finger on the pulse of the street of names that are hotter names. And that changes, that comes and goes. And like, Zoom and all those stocks, TDoc and all those. I mean, those were, hot as a pistol for a while there, and they became, definitely crowded trades.
Bill is asking, when you're having a stock with a particular amount of gain going into an earnings event, how much of a cushion would you typically want to have above and beyond the expected move from an options pricing standpoint?
Well, it depends. If you're at a profit, then you could take a little more. If you're at a profit and you pared some of it back and you put some in the bank, now you've cushioned some of that, so you could take more heat. If you were to hold the position, completely, let's just say you took no profit, I would say at least the amount that is expected. If you're going to use the option pricing market, at least the amount. Amazon's a really good example. Recently, Bob, I think we had said it was about 3.5%, right?
Yeah.
And it was 2 times that. It ended up going down 7%. So that's pretty abnormal. To me, that said, for a stock that big, right, Bob, usually a stock like Netflix, Amazon, Microsoft, they pretty much nail it right to it's real close, right?
Very, very close. Clearly,
Very
that was
close.
a big surprise.
For it to be double, to me, that says something, bad. That to me, that's negative. That it was actually double what the options market was expecting on the downside. To me, that means that's a negative. I read that as a negative surprise. But to answer your question, I would say, 2 times would be good. That would be, that'd give you quite a bit of cushion. And again, the smaller the stock is, if it's some thin name, that's a whole different story. That the option, you might even not be able to get pricing from the options market. But even if you can, there's going to be a much wider differential of, potential miss on a smaller cap name than there will be on a widely followed name. So then you have to, adjust even more for that.
Very similar to sports betting, if that makes a good analogy. That's just what the market is expecting. Doesn't mean that's going to be where the result is. And obviously, double that amount is a real safe kind of number.
Every now and then you get a 10-point favorite that gets blown out, right?
Loses.
And loses. So that can happen, but it doesn't happen often. And with the market, it's the same.
Melvin is asking, for a stock, if you get stopped out and lost once, and then it sets up a pivot reset, do you get in at the same full size position, or would you do it at a lesser size position? An example was AMR. He bought it on late July, stopped out, and then it kind of set up again the last couple of days.
Yeah, good question for you too, Mark. And I think you might have the same answer, but it depends. If the setup improves, I might take a bigger position. I might take the same size if it was a full position, maybe another full position. I might take it even bigger. It really, I can't say based on how many times it stopped me out. It's going to be based on what the stock looks like, what the setup looks like. So sometimes you get stopped out and then the setup actually improves and it's a better setup. And you look back and you say, okay, I was early, it needed more time, but now it looks even better. And I'll go even heavier. How about you, Mark?
Yeah, similar. And I would say then the other thing I would factor in is how well is the rest of my trading going. Like I'm not going to go back in bigger to a name I got knocked out of if things aren't working. But if things, because sometimes to Mark's point, maybe we have a correction in the market. You try a name or two and you get knocked on one and you were just a little early, but then other things start to work. You buy another name or two, those are working. And then a name you got knocked out of resets, then I would absolutely go in bigger.
Yeah, here's a perfect example right now. We've got, a few names that, have been long, PNA, PANW, and Google. So we'll forget about those. But let's just talk about new positions entered. We got CEIX here, right? So down about 1.5% or so on this. So this, we have to say, this is still holding up, but not the greatest with an outside day today. We'd like to see this, moving higher. So we got WMS down about 1.9%, call it 2%. Again, similar to CEIX, not much traction, but not doing anything, no major violations. KMX couldn't come out today, tried to, pulling back in, couldn't get that to move, right? Goldman Sachs here, another one. isn't moving, squatting and sitting down here. So SOX is doing pretty good. We got the index, the semiconductor SOX index. This is doing pretty good, and we got SKY doing okay here. Still not breaking out though and getting into new highs here. So you look at that. What does that tell you? No real traction yet. So you should not be getting aggressive. A few positions here. We try a few. So we've tried an index. We've tried a few individual stocks. They're holding up fairly well. So I tried a few more, and now I'm going to wait. I'm going to take a look here. And we're going to watch. And even if more break out and I put them out as buys, doesn't necessarily mean you should be buying. That's what I think the real important thing you have to realize. You have to gauge it by what's going on in your own portfolio and what kind of traction you're personally getting. I'm looking here just at, everything that we have long, and, there's no real traction here. And again, if there was, we'd see the risk model, the individual stock component of it would be positive. And I can't remember the last time it went positive. It's been a long, long time. So, we haven't had that green light. Again, does that mean you shouldn't trade at all? No. If things are going well for you, fine. If you're doing well short-term trading, keep pressing that bet. Whatever's working, that's what you press. Whatever's not working, that's where you back off from. And sometimes nothing's working and you just have to sit back.
Got a couple comments about people just really seeing the speed of the new platform and the quickness of things getting pushed out. So thank you for those comments. And one other final comment I did get here for those that were asking, if you did have the credit card previously provided on the platform, yes, we did not transfer that for security reasons. The migration that would have been vulnerable. So we are asking you to reload your credit card information back again into the platform. So that answers that question. Seth is asking, for someone who has a full-time job and can't watch the market, throughout the day, all day long, would you recommend using stop orders above identified pivot points on the best setups, or would you have any other ideas, suggestions?
Yeah, Ralph Kopp would probably best answer that, because Ralph has done a really good job being able to work a job and manage his portfolio and do well with his trading. We do have there is I think a session that's probably in the archive somewhere with Ralph, isn't there?
Yes, it is.
Yeah. So, but I don't. That's not something I have personal experience with, because I don't work a job and trade part time. But we know that about 50% of members are part time, so a lot of people are doing it that way. Look, there's really, if you can't watch it, you don't really have any other choice but to set buy stops. But I would be careful about setting them, pre-market, especially if they're close to the price. So, what you probably want to try to do is once the market opens, you get some of these, names that open quietly, they go inside, then you can set maybe those buy stops above the pivots. But if you do them pre-market, you might, gap the stock, give the market makers a chance to, to run those stocks up on you and suck you in there. There is, if you're close enough, there is a little bit of range. There's no manipulation in the market. People think, the market's manipulated and so forth. Well, on a micro basis, it's not manipulation. It's just a fact that that's their they have a certain amount of latitude within the bid ask range. So, when you see a spread, even though you might see a 10-cent spread, it might be real light in that 10 cents, and the real size might be $1 apart. So they've got that range where if you go in there and you just say, put, I don't know, 2,000 shares, at a price that's, 70 cents above where it's trading. Well, there might only be 500 shares or, in between that price. So they can take that up, on 100 share lots and execute you. And then, because it's very thin within that bid ask spread. So you don't want to give them the opportunity to be able to do that. And again, the further, the further away you are from that pivot point, the less likely that that's gonna happen to you, and you're gonna have the market maker. You're gonna suck the market maker to that price.
Exactly. Matt is asking just real quick, the 20-day moving average. I'm sorry. He's asking if the 20-day moving average has any factor into determining whether a stock's in an uptrend or not. And I didn't read the question fully before.
Well, generally, the 20 days above the 50, but not in low cheats, it could be below. So no, not really. An uptrend is based on my trend template criteria. The 50 day, if the 50 days in a sharp downtrend, that means that your intermediate term trend is down. So not really. The 20 day is more, I look for the 20 day to hold after a breakout. And close below it lowers the odds of success. So sometimes, sometimes a 20 day hold, sometimes a 10 day will hold through a good portion of the move. You have to, if you're looking at moving averages, say, oh, I'm going to sell when it crosses one, you kind of got to look back and see, what moving average is held. If you're looking at the 20, the 10, the 50, if it's held the 10, it's made a 30% move and held the 10 the entire way, close below it, probably signifies that, maybe a meaningful change there, at least on a short-term basis. But no, they're 20 day. I wouldn't use that as knowing if the trend is up or down.
All right. Just a quick question here on importing stock from your trading account. I'm going to have a tutorial, Rick, about how to be able to do that it's going to need to be modified and formatted locally. You can't just take it right from your broker. It's not going to match.
Yeah, you're going to do a tutorial, so get to that later.
Yeah. Question here. No. David's just basically asking, in this market, when trading in the short term with normal size positions, if you're not making progress on a buy during the day, does it make sense to close out the position to avoid overnight risk? What do you tend to do?
Well, Mark, that's a bit overactive, you think?
It would be for me, similar to the Mark, you were off what somebody was saying, hey, can I just trim everything at 1 or 2%, move my stop to even? And I was saying, well, you're just going to get stopped out at even an awful lot if you do that. I mean, you can, but yeah, that's too active for me, for my personality.
Yeah, again, you're going to be doing a lot of trading if you're being that stringent on not allowing the stock room. What I like to do, look, you have to go into every trade with a plan. So, and sometimes my plan is a split plan. Very, very often, at least in recent times, this year, most of the time, my plan has been a split plan, meaning that I'll go in with a certain size and looking at that as maybe a day trade or a trade that I'm hoping will move in my direction very quickly, so I can pair some off and then finance my risk for a bigger trade, a longer hold. But and on the other side, I'm usually coming up with a stop. Well, I'm always coming up with a stop, but I have an amount that I've decided on that I'm going to risk. I pretty much let the stock stop me out. Now whether that's intraday or it's holding overnight, I'm still sticking with that original plan unless something goes wrong. So let's just look at SKY, for instance. So it pulls back here. I'll just zoom up a little bit too. So it breaks out right on Thursday. Friday pulls back. So now I went into this with a pretty good sized position and just said to myself, hey, if this starts drifting off here, I'm going to take the overweight off. But on a longer term basis, on a swing basis, it still looks fine. And even if it came down and took out the low, that's real, the low of the previous day, that's not like a big violation. Normally I would set a stop at the minimum below the low of the pivot here. So that would be below the 53.15, which is also above that 20 day. But there would be basically two trades there. So again, thinking of it as, let's just say I use the low of the day for my intraday trade. I'm probably not going to change that either. That's something that I've already sort of predetermined. So I predetermined those two stops. Now, here's the other thing. And this is what I try to, this is what you're really trying to accomplish, particularly in a market that's, really coming off of, say, a bear market or something. Sometimes I go in there with a shorter term horizon on that overweight. And now this stock, let's just say, takes off, goes into new high ground, gives me a really nice gain. and it's really acting great and I got a big cushion, well, that's the situation where I might say, okay, you know what? I'm going to hold some of this overweight now longer term because it's acting so well and I've got such a good cushion on it. Or maybe if I was going to sell 75% of the position, I only sell 25% of the position because now a bigger gain cushions my loss more. So that's the thing. The more the stock goes up, the less you have to sell to cushion your to finance your stop for holding either overnight, for a bigger move. So if it only goes up a little bit, I mean, you could go in there and take a big position, and let's just say it just goes up just a little bit. You sell 90% of it. You might finance a 10% of the position for a full stop. So you got to do the math. I'm kind of segueing into a little bit. I'm getting maybe a little more advanced than your question, but yeah. So it's not. There's not a fully black and white answer. But again, I'd be careful. You got to realize that if you are going to choke the trade off like that, you're going to be doing a lot of trading. And if you're okay with that, then fine. You can stay real tight on that risk, which then you have to have a reentry plan, because a lot of times you're going to get out of a stock that looks perfectly fine on a daily basis just because you got nipped out real quick on an intraday, and you got to figure out how to get back on that, or you're going to be leaving a lot of, some of the better names. You're going to be not, you're not going to have exposure in.
Abby's got a kind of lengthy question, which I'll paraphrase and shorten here, but he had experienced some massive slippage with the trade he took this morning. And
what's the stock?
It's on the Indian stock exchange.
Oh, okay.
So he took a position. He's more or less asking, one, you have to be aware of slippage can happen, but two, he's asking essentially what is the maximum volume versus your average daily volume that you would suggest taking in a trade?
The general rule of thumb is 10% max, usually, 5-10%. If it's a really big, if it was trading, 10 million shares a day, I mean, you could trade bigger than that, but a smaller, if it's trading 100,000 shares a day, I certainly wouldn't want to be going in more than 5 or 10,000 shares. So just think of it as 10% of the volume as a good rule of thumb for your max size.
Yeah. Greg is asking, he did not buy TXT earlier today, but now that it's coming back to the breakout level, his question is it a stock that could be bought?
It's on a gap. It's still up. Let's see, what's it up from previous day? It's up about 2%, maybe 1% or so above the pivot here. I mean, you certainly could. I think it's a little bit risky that it gapped and now it's squatting here. But if you're going to play this, you want to try to play it on an early day reversal. Generally when the market is reversing, so you can at least give it the excuse that the market's holding it back. And that's what's happening. The market, the Dow is coming back here, right? And so you're getting maybe the weight of the market's pulling it back here. But, I'd be careful. I'd be careful. Again, if you got to do the math. Where's your stop? Where does the trade sour? I would say, certainly if this came and took out the low of Thursday, that would be a very bad day. So let's calculate that from here. If you were to buy it here, so that's about 4.8. Let's call it 5%, right? So that would be sort of my max stop for today. Now that might change. We'll see how it trades. Like I said, I have to look right now. That would be a big outside day and that would look really ugly. So I would definitely, that would be my maximum stop. So back into that risk, if you want to use a max stop. Now, another thing you can do is, right here, as it pulls back, it really should hold up. If it's strong, it probably shouldn't come all the way back down and take out the low. So you could use, if you want to be real tight, you can use the low of the day. There's a good chance though, that low of the day might be taken out here and it might come back and fill that gap. But again, I think your risk reward, just take a look here. If you just recovered to the old highs, you can see that's about 2 times to the low. So just that alone, the low of the day is a good risk reward if that's, if you're using that as the high as a potential upside. You got to just do the math. You got to do the math. You got to back into the risk. Look at the chart and see where the chart sours, and then see how much risk that is. and then back into the risk. That's why we have the risk calculators where you can go in there, you can put your position size. And so it'll put the stop, and then it will tell you what to take for a position size to have the amount of risk that you want. And so that, I mean, I do that automatically. I don't need a calculator. I can do that in a second in my head. I know exactly where I want to be, what type of risk, what type of position size. But you should use those calculators if you want to figure that out and back into that risk. And you can back into it on a percentage basis or a dollar basis. We have both of those calculators in the analytics.
Yeah.
And those are in the app also.
Yep. Both calculators on.
Yeah. So it's nice and convenient. You can have it right on your phone. Those calculators are also on the app.
Yep. Dejan, I got your message here. And Eric, I got your message here. And Renee, got your message here.
How about Mark? I'm interested in your feelings on this TXT. And also, I haven't asked you today. Have you done anything today?
No, I have not, and I wouldn't touch it. Those are my,
wouldn't touch
but mine, I wouldn't touch it because things just aren't working. To me,
Yeah.
it's a lower probability play when you're buying something that's pulling in on a gap to begin with, and you add that into sort of the environment of the technical themes we've been seeing. We've been seeing lots of squats. So why do I want to buy a squat? I don't,
Yep. And look at all the stocks here. Look at all the buy alerts that broke out this morning. We're up there. Some of them are down now. And so,
it's a squat fest. Yeah.
It's a squat fest. And we're not seeing, we're not getting much traction from the recent gains. So the general rule of thumb, and I say this in both my books, is that when things are working, I'm more forgiving. When they're not, I'm much more stringent, and I'm less forgiving. But now here's a perfect, look at the discipline, that Mark Ritchie's, has. He has done anything today. Look how many stocks popped out today. I mean, a whole bunch of names popped out here. The individual stocks actually look way better than the indexes today, which is a step in the right direction. But all these stocks breaking out, and he did absolutely nothing here. And even my plays are conservative. My Goldman Sachs, KMX with this really tight, just really, really tight. I didn't chase a bunch of stocks either. We're being really, really, really careful here until we see things working. And Mark's being as careful as you can be. No trades at all. Now here's a guy's, up triple digit, returns very often, and last year up 300%, and this year doing pretty well too. But again, you see, no concern whatsoever about missing trades, fear of missing out. There's no chasing. That's the one thing we're never chasing. We're staying completely disciplined. If we're taking trades, it is completely methodically thought out. We're measuring the risk, and we're taking very calculated risk, and we're only getting aggressive once things are working and we have profits to work with.
It's like you just read Arnie's question, which is exactly what you just answered.
Okay, good.
Renee is asking real quick if you ever look at any unusual option volume to determine a stock that's getting action with buying of options.
I never do. No, I don't think there's much value in that for what I do. But I don't know, Mark, do you ever look at option volume?
I don't look at it. Occasionally, I know like some guys, they'll post if there was, there's a lot of hedge funds buying stuff. Sometimes it can lead to some short-term momentum, supposedly, but I don't. It's not something I regularly track.
Yeah, it's such a short-term indication. It has really no long-term. And anyway, put it this way: I don't know anything about it, to be honest with you. I'm just not an expert in that. So if there is anything to decipher from it, I'm certainly not good at it. So let's just put it that way. I know the Nigerian brothers, that's their thing. They'll look at unusual option. But to be in all honesty, as far as, all the picks I've ever seen, Nigerians pick, I've never seen it. Every time it's like they pick something, it tanks. But that's what I've seen anyway. I haven't seen them be good stock pickers, or at least I'm not sure if it's John or Pete, one of them. But again, nothing against the Nigerian brothers. They've been very successful in their own right. But I know they look at that, so they would be better at probably deciphering that information.
A couple quick stocks here. Apple, is it a pullback buy setup here?
Let's take a look. AAPL. Well, I mean, yes, in a microcosm, pullback buys, for in my definition, are coming from buyable bases. See, everything you have to realize that it's only as good. Well, this is sort of the general rule that I always apply. The intraday is only as good as the daily. The daily is only as good as the weekly. The whole chart pattern is only as good as the context with where it is within the long-term trend. So, meaning that I'm buying a pullback buy only if it's in a base that I'm interested in the base. So first I have to look at this. What do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is like a 12 days, 12 days of action. That's not a base. That's not a base. So is this a pullback buy? Yes, that's a pullback buy coming from 12 days. Now if you want to look at, if it was a much larger base, like for instance, I talked about the ARK, ARKK, the ARK fund, right? So this is a large base here, right? Take a look here. That's a big, large base. So now if this puts a pullback buy in here, see, I'm buying the pullback buy through the cheat within a cheat of a huge base. That's how I'm applying it. And the pullback buys, I'm only applying within the base. So they've got to be either in the cheat, the low cheat, the handle, or on a pullback to the breakout. So Apple has none of those. Now, is it a pullback buy? Yes, in a microcosm, it is. But whoops, AAPL. But look, it's long gone out of the base. See, over here is the right side of the base, which you never got to handle. This is why playing cheats, especially on bigger cap names, is important to learn. I love using the low cheats and the cheats on the bigger cap names. So now run straight up. Now this is just, a pullback, a natural reaction, if you will. So yeah, but if you're trying to get on board, after a natural reaction, you're interested in this stock and you don't want to chase it, extend it. The way I would try to get on board would be coming from a natural reaction as it turns back up, so you can use the pullback buy. And today, yes, would have triggered that. But I just want to make sure I could give you the context and you keep things in context. Otherwise, you'll be seeing pullback buys, everywhere. After 3 days down, there's a pullback buy. I mean, here's a pullback buy right here. Right here's a pullback buy. You come in for, let me just get my drawing tool. So you come in for 1 day here. All right, whoops. Come on. Yeah, you come down for 1 day here, and you pull into the range, and then it takes out that high of that previous day, which I'm messing this all up, pulling that down. That's a pullback buy. But, again, that's a pullback buy of a 1 day pullback. And you can find these all over the place. It's the context that matters.
Ernest is asking about NVIDIA, which I know a lot of people have a lot of eyes on, but
yeah, it's coming. It's got a little pattern it's developing here. And again, a similar situation where you get this pullback here, and now you've got a small base. So if you're looking to get back on NVIDIA, this is probably, this would probably be the time to buy it as it's coming back up through here. This thing is just, the stock that keeps on giving. It's pretty amazing. It's been a monster. So, but yeah, this would be moving through a pivot here. I was going to add this to BioAlert, but again, it's a pretty small base, but it is acting phenomenal. I mean, it just seems to always come back here.
Frank is asking on mRNA, Moderna.
Mm-hmm.
He bought it in late June before this about 40% move. He still has all of it, and with earnings coming up this week. And his comment is he feels this stock will double in the next 2 years. His comment is, how would you handle earnings coming up this week with their full position still on?
Right. Well, my feeling that it would
correction, half position. He has a half size position, but same answer.
It really doesn't matter what I would do. It matters what you would do. I mean, you're the one thing that thinks it'll double. So I don't know. I don't ever trade on what I think. I don't know if it'll double or not. Maybe it will. I mean, and again, if it does, that's the worst thing that can ever happen. The worst thing that possibly can happen to you is you think the stock will double and it doubles, because you're going to feel like a genius, and you're going to, and it's going to make you dig in the next time even more and probably not sell a stock that's in trouble even. This is, or maybe you won't do that, but it certainly is not going to help the situation of you respecting, the price action, respecting risk. If your gut feeling tells you stocks are going to double and they double, maybe you're that good at, I don't know, maybe you're phenomenal at fundamental analysis, and you can do that. I don't know. That's why it really is important, what your goals are and what me, I'm out of the stock. I bought it down here and sold it in a few days, so you're already 10 times smarter than me, with this stock. So you're going into earnings, you're rolling the dice. This is a stock that's extended. It's already run up, so it's already discounted something. So I don't know, your guess is as good as mine. Whether this stock's going to gap up 20% on earnings, gap down, or it's going to be a non-event, is nobody could tell you. The CEO of the company can't tell you, and the best analyst at Goldman Sachs can't tell you that with accuracy. Nobody knows. All I can do is look at the options pricing, if there is option pricing, get an idea of what the type of volatility is going to be, and manage my risk in relation to my reward and to what I'm comfortable with and what my goals are. See, I'm looking at hitting goals. I don't care if the stock doubles. See, that's the difference between myself, Mark Ritchie, and most traders. Amateur traders would be so pissed off if they thought this stock was going to double and then they sold it and then it doubled. It would haunt them. I would forget about it in 24 hours and never even remember it happened. See, because it doesn't matter to me. I don't need that to happen to reach my goal. If it happens, great. But if it does happen, it's going to happen from a low risk standpoint. It's going to happen because I positioned myself in a way where I wanted to take a certain amount of risk, and I maintained that, that mitigation of risk, and I got that upside, because it allowed me to take it, to hold into that somehow. But it's not going to be because I think it's going to double, and it's not going to be because all the analysts on the street love it. It's not going to be of any reason other than measuring risk reward. So you've got to ask yourself, what are you willing to risk? You're the one up big on it. How much do you want to give back? Where is your, what's your risk reward in your mind? I would sell it. I would be out of it, or certainly enough of it where, I cushion myself. And if it comes in, it gaps down, I'm okay with it. But it has to be what I'm okay with. What I'm okay with may not be what you're okay with. I know people that they can't stand if the stock goes against them 20 cents, they're losing their minds. And then I know other people that sit through 50% pullbacks with complete confidence. They're like, oh, no problem. It's no big deal. Yeah, I'm down 500 grand. No big deal. It's going to come back. It's Amazon. I know people that lost $10 million in the market and didn't bat an eye. All right. I've told this story before. We had a long time ago when I was in New York, we had a doctor friend of mine who he ran up an $80,000 account to over 10 million. And then he lost the whole 10 million and the 88,000. And he laughed about it. He said, no big deal. Easy come, easy go. Me? You'd be reading about me in the obituaries. So I mean, it's really a personal decision, but just looking at it, it's extended. The stock's extended. So again, if it were to blow off from here, it'd be pretty hyper extended. Let's look at a weekly. Yeah, so it's not hyper extended, but it is certainly extended. But it has been acting phenomenal. I'll give it that. I mean, it's really acting great. Pfizer's even acting good. So these, these vaccine stocks, it looks like we're going to need more vaccines. I know Moderna, I've at least heard that there's even more than just the vaccines with Moderna. They've got other things going on, and there's some really good things happening as far as, I guess the drug pipeline or whatever. But I don't really, you sound like you know the story much more than me.
And that ties directly into Robert's question as well. But Robert, the question you're answering, how to determine that expectation of the market move, that's a video archive video tutorial that we do have recorded that you can watch to learn how to calculate that from the options.
Here's the thing. I've gotten triple digit returns holding stocks where I've had stocks that have doubled and tripled. I've gotten triple digit returns from day trading. I'm going to get there either way. I can get there. There's a million ways that I can get to triple digit returns. I'm good enough where I can trade the market under pretty much any circumstance, and I'm going to get to my goal. So again, it's, how are you going to get to your goal? Right now, Mark Ritchie and I are approaching this in two completely different ways. Now, we did that, a year ago, and Mark Ritchie was up double what I was up. I still was up triple digits though last year, and Mark Ritchie was up more than double what I was up, and we approached things, this year in a completely different way, and I'm up much more than him this year. But again, we're both going to get there. Like we're going to get, Mark Ritchie's going to get there. He's going to get to his goal. I'm going to get to my goal one way or another here. Mark, what's your take on this? I guess, these hypotheticals, if you owned it and if you, had
Yeah,
it.
this one's pretty simple. I would actually say, your point, obviously everybody's different, is really important, but if you're going to play this for a big move, it is absolutely going to come down to the 20 and maybe probably even to the 50. And so if you can't stomach that, you've got to trim the position back to the size that you can. So if I was in this, I would have probably reduced once or twice, and then just like you often do, finance that third piece to hold for the bigger move and switch over to a 50-day trail or a 10-week moving average or something like that.
Yeah. So what Mark's doing is he's forecasting sort of where he thinks they see. And again, what I love about what Mark's doing is he's looking at the downside. He's saying, okay, what do I think that this is, probably naturally going to do? And for me to get to that bigger move, what am I going to have to go through to get there? What kind of horse am I riding here? Is this going to be one that's going to buck around? So how much bucking is it going to do? So, okay, let's say it's going to come down to probably the 20-day at some point. You're going to need a pullback there, maybe to the 50-day. So he's saying, can you handle that? Well, you have to maybe pare your position back or be able to handle that type of drawdown. So that's the question that has to be answered. Me, I wouldn't want to handle that drawdown. See, I would not want to handle that kind of equity drawdown. I would not want to have a stock that's up 348, 349, go down to 244. Nope, not for me. It's just too much for me. It's a 30% drawdown. I can't remember ever when I let a stock go down 30%. Except back when I first started trading and I didn't know what the heck I was doing, and I get myself in trouble. But to let a stock go down 30% that I'm up this big on, and you're actually up a lot more. You said you bought it back in June. So I would never allow a stock to go back that much.
Yeah, I kind of find it interesting how people think the stocks are going to go straight up and never, ever go down.
It may. See, I look at it this way. How many times is this going to happen where you got an extended stock and it's going to double from here? Like, what is the probability of that happening? You may get it right, but how repeatable is that? All right. Let me go back and tell you another story that I've told before, but back when I played a lot of poker, every now and then the World Series would come, the WPT would come. I played Foxwood was one place I played. Atlantic City I played a lot in, but Foxwood was one of my main. I was there sometimes 3, 4, 5 days a week at Foxwood. This is when I retired after 2000. For a couple of years, all I did was play poker and play golf, and the market was in the bear market. So what would happen is every now and then, all these big players would come, right? You back then it was, Moneymaker and JC Tran and all those guys, the Mouth, all those guys would come to play the big tournament. And what would happen is we'd go from a 10-20 game or a 10-25 game, no limit game. There'd be 50, 100, 100, 200 games, big games with enormous action, tons of money on these tables, and everybody would run to play these games. But here's the thing, a week later, the game is gone. Now, so if you got yourself stuck big and now you're down, a couple 100,000 in that big game, you happen to have some, a bad run. Now you've got to go back to the 5-10 game and grind it out for a year to get it back. You see, that game's not there. So I say to myself, how many opportunities, if I'm wrong, do I have these big opportunities in front of me? See, that's why I like the shorter term, the swing trading, because I know that those are there. Those are there a bunch of times per year. Short-term trading's there all the time. Like there's the 5-10 game is always there in the market. You know, the 100, 200 game, that's not always there. So I got to start looking at that. Maybe I'm going to play that game, you know, when coming out of a bear market, when the probability of getting paid off is much better and it's much bigger. But that's the way I look at it. I don't want to get myself stuck into a situation where, you know, I'm playing for this big move and I'm saying, okay, I'm going to allow it, you know, this big drawdown. But now if I'm wrong, you know, do I have that opportunity again? How many times am I going to have that opportunity? If that makes sense.
It's critical.
You got to think about opportunity cost and available opportunities.
John asking a question, which is in the user guide, John, the difference between the breakout alert and a buy now. The breakout alert is not a official buy. Buy now is. So just read through the user guide again to make sure.
Yeah, the
you
breakout
understand.
alert is just letting you know that a stock is moving through a pivot or moving through a, you know, a pullback buy, and it's just giving you, you know, that's why we named this Mon Alert, because we want to enhance the image or the knowledge that this is a monitoring and alerting service. What we're doing is trying to give you training and then alert you of and keep you abreast of important stock market activity that's happening within the confines of the strategy. So you can then, you know, see this is what a breakout looks like. This is what a pullback. This is what a reversal recovery looks like, and start making decisions, you know, informed decisions on being able to spot that for yourself.
Joe, just got to go to your app store and then just click search for Minervini Private Access or find your existing apps and then just update or download.
And another thing I wanted to point out too is that, you know, some people trade sort of as a hobby or as, you know, their investment income, and they have a job, or maybe they're even financially independent. See, I traded as a way to make a living, you know, and this a perfect example is when I was in the music business for many years, and I played as a touring drummer for a while and had recording studios. But years and years later, I went to go see a friend of mine. His name is Ronnie Lawrence. He's a great guitar player. He's played on all kinds of records, and he plays in little clubs now all over the place. And I went up to him, and we were talking about, you know, playing. And he's saying, "Hey, do you play anymore? You do anything?" I said, "Ah, you know, every now and then, you know, I go and I'll sit in somewhere. If I go to my hometown, you know, I'm sort of like everybody kind of knows me. And if I go to a local place, a club or something, they'll say, 'Hey, come up and sit in with us.' And I might sit in." And he said to me, he looked at me and he said, "Well, I play to eat, man." He goes, I play to eat. I got to pay bills, you know, and that's the difference. Some of you are, you know, trading passively where, you know, you don't really care, you know, and then some of you are trading for a living, literally for income. You know, I tried to, when I first started doing this, I said, you know, I needed to trade for a living, but what I did was I just had my expenses as low as possible. First, I was living with my parent. I lived with my mother, and I was trying to keep my expenses low. But then I went on my own, and I just like had all my expenses as low as possible, and just tried to make it where I didn't touch my trading account. And I did other things, you know, to try to pay my bills, and then just built my trading account. So again, it's that mindset of where are you? Are you, you know, trading? You have to build your account. You're starting with a very small account and you're trying to build it to become, you know, wealthy, or are you already wealthy and this is something that's more passive? And that really has a big determining factor for whether you know, your short-term trading, whether you're you know, how much drawdown you're going to take. That's a big factor in itself. So again, it comes down to those personal goals and what you're trying to accomplish. And you know, I'm trying to get to my goal. You know, I'm just trying to get to my goal. I'm not. I don't care if, you know, if that happens where I bag an elephant or if I take a whole bunch of little tiny profits.
All right. Getting close to the end here, Mark, in time. I know we didn't get to all the questions today, but obviously, guys, keep a track of them and we can get to them next week, and always here every week to answer questions. So why don't we wrap it up here? The replay of this will be available in the next few moments, posted on the live stream. Stay tuned to the live stream for real-time alerts from Mark throughout the remainder of the week. And also, again, we will be doing a tutorial session for the new platform So look for that post as well.
Yeah, and if anything changes dramatically, either good or bad, if we break out here, a bunch of stocks set up and we start really, hitting on all cylinders, or if, maybe things degrade, I might come back in maybe, Wednesday or Thursday, we'll do another session and we'll take a look at the market and discuss it or even answer more questions. So sometimes, we try to add another session throughout the week, but if things are pretty much the same, then I don't, but we'll see. Let's see what happens this week. And maybe we'll have another discussion this week.
All right. With that said, enjoy the rest of your day and look for the replay to be posted here shortly. Thanks, Mark and Mark.
Bye-bye.
Yep,
Thanks.
take care, guys.
Yep.